In this video, learn the basics of market profile so you can use it as a tool to make effective trades in SPY. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, a junior SMB trader teaches you how to use market profile and volume profile to identify key technical areas from which to make winning trades.
Video we're going to be doing today, this is going to be an introduction to market and volume profile. So when I talk about the SPYs and the futures and I show you guys the levels that I'm trading in the morning, those levels are all a combination of using classical technical analysis, swing highs, swing lows, breakdown points, consolidations, things like that. But also what I'm adding on is volume profile. So if you haven't heard about it before, it's going to be a good introduction for you. And it'll kind of explain the rest of my process to kind of put both pieces together and build a much bigger contextual analysis of the overall market. What is market profile? So market profile is a way of analyzing the market or a specific chart, even any other symbol. I specifically use it for ETFs because they're extremely liquid and you could follow institutional volume easier. But it's a way of doing it on a horizontal dimension. So normally what we would do is we would look at a chart on the vertical dimension. So we'd be looking at volume by time. And this is a way to do it by looking at volume by price. So this provides an opportunity for us to see how and where volume was distributed throughout the day and at what prices specific market participants showed acceptance to price. So if you look at a chart, you can kind of tell by like consolidation areas or things like that where there was relative price acceptance. Like if we couldn't trade below a level for a certain amount of time, that would be price acceptance. But this is a way to see it on a daily time frame to build a much broader analysis so that you could look at multiple days, put the charts together and kind of see where and how value is moving on multiple day time frame. So basically what we can do is we can see where the value area is and then we can compare the value area of each day in the context of the larger overall market environment. And this can help us to formulate higher time frame ideas.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
There's specific key terminology that you would use with market profile, volume profile. And the key aspects of those are the value area. So this is all calculated on your charts. Like you're not going to do this by hand. You put volume profile in on whatever charting software you have that uses it, and it'll highlight the value area for you. And this is going to be where buyers and sellers have shown price acceptance on that day. Then you have the value area high, self-explanatory, the value area low. And then the most important thing to me is the high volume node or the point of control for that entire volume profile structure, right? And that's going to be the specific price at where the concentration of volume was the highest on that day. And it's going to come down to the penny, right? It's going to be the exact price. So like I said before, we can determine overall bullish or bearishness of the market structure by comparing day by day how the value area is moving. And specifically, the point of control can be a really valuable resource if you're looking to determine a potential launching point of directional movement after you have like a multi-day consolidation. And we'll get into that a little bit more. So here's an example of what this is going to look like. So each of these blocks are going to be a volume profile structure for a specific day. And the shaded area is going to be the value area. And then this red line that goes through the middle is going to be your point of control or your high volume node. So basically what we're looking to do is see how the value area is shifting across multiple days. And then we can use that to kind of determine how is the overall market structure changing from day to day. So from this, we look to try and build a contextual analysis of whatever ETF we're looking at. It could be the SPYs, the Qs, it could be oil, basically anything. You could use it on a specific stock, I personally don't know anybody that does that. This is like a lot of futures traders will use market profile to develop their reference areas, and that's how I learned. But basically what we're looking to do is if you have a value area on one day that is entirely above the value area of the previous day, intuitively that's going to tell you that price acceptance was higher today than it was yesterday. That's a bullish sign. And likewise it works in the reverse case for the bearish side as well. But then when things start to get interesting is when you have these balance areas that develop. So it's not too hard to tell that when we were in August trading in the SPYs, between that 294 level, basically the entire balance area that was formed in the whole month of August, that basically could have been combined into one larger composite structure where we could have found the high volume node of that larger composite structure and use that to determine a line in the sand who's currently in control. Here's a quick example of what a bullish session would look like. You can see on this day the value area was contained within, this is a relatively balanced day. First hour high, first hour low got put in, we peak above the first hour high. We don't really do anything too crazy. We kind of just close, top end of the range in the last 1 minute of the day. The next day we come in and we have a strong day right off the open, gap and go, and we hold at higher prices all day. And you can see that the value area structure that was developed on this day is entirely above the previous day. That's a very bullish sign, so that's an example of that. Bearish session, exactly the same thing. We have a day that develops, and then we have the next day, we gap up, trade all the way down, but the concentration of volume was done at the lows. So while price might look like it took out this entire range and engulfed the entire day, the key thing to remember is that, look, most of the volume was done at lower prices. So value actually shifted lower, even though on the day, we basically just ran the entire range. And this kind of lets you know that, okay, the high volume node is down here, and the concentration of volume is at the lows. So this might be an important area of inflection going forward. So here's an example of having inside and multiple range days. So here we have 1, 2, 3 days where the value areas are all relatively close to each other. And this is when we're going to start thinking about combining them all together and forming a composite structure. So why would we create a composite structure? What would we use them for? Essentially what we're looking to do is we're trying to define a balance area instead of just the high and low of the range. So a lot of times when you're looking to try and play a breakout trade or a breakdown trade, you want to know what the high of the consolidation is and what the low of the consolidation is. And anywhere within the range, you're not looking to make a trade because you don't want to get, and this is a term people use all the time, you don't want to get chopped up within the range. Well, what volume profile allows you to do is to find a key inflection area within that larger overall balance structure where you can potentially have a directional movement launch from. And it does tend to be around the high volume node of that area. Or some people do call it the point of control. It's essentially the same thing. And then if you look at this chart, this is that previous 3-day balance area, but now it's been combined into one larger structure. So instead of saying, okay, I don't want to get involved in the market unless we break above this high right here, or I don't want to get involved in the market until we take this short right here, you can actually see that this area here, this high volume node, is going to be potentially an area of inflection and an area that can launch directional movement. If I zoom this chart above, another day or two, what you'd actually see is we broke down from this balance area, and then on the next day, the high that was put in on the day, we had a morning run right back into this range, and the high of the day is to the tick, the high volume node. And then we rolled over from there and continued to move lower. So that's kind of how you can use volume profile instead of just having key technical analysis. You can follow volume, you can follow institutional volume, the people who actually drive the market, and actually make decisions based off of what they're doing instead of just seeing on the chart like everybody knows how to do. So I wrote down some tips and tricks, like things that I do in order to build a much larger picture. Because like I said, again, I'm still going to be combining key technical analysis, the stuff that you've been taught before, things that everybody uses, because that can be a self-fulfilling prophecy too. There's no reason that a certain key pivot or key swing high can't actually hold. But combining that and building out a zone, so you guys have seen in the futures, I have these zones that I build. Building out the zone using not only that swing high, but value area highs, value area lows, and high volume nodes can allow you to get a little bit more leverage in building where you think the market can potentially inflect from. So another thing, when you're building those composite structures, the value areas don't need to be like perfectly lined up. If they're like roughly within the same, like if you look back at here, like they're roughly in the same area. They're not directly lining up, but that's close enough that you can combine the value areas. Like the bulk of the volume was done in the relatively same spots on all 3 days. And then another thing you have to look at, so you're also going to see areas of low volume within the chart. So potentially these areas right here, you can see there's this is what we call a low volume node. This is also a low volume node. Low volume nodes are kind of really important if you study market profile theory. So the idea is that markets are efficient, and an efficient market is going to look to try and find the most buyers and the most sellers and whatever price that lines up with. It's always looking to find how many participants are involved in the market. We're going to have price discovery until we reach an area where there's the most participants involved on both sides. So low volume nodes are an interesting inflection because they're a historical area where volume has not been done. And the market doesn't know what price acceptance is or is not at that area. So oftentimes low volume nodes can be vacuums where price will just quickly move through or even fill in order to find the next previous area of high volume. Right? So it's kind of like a little bit more difficult to wrap your head around that concept, but that's the entire theory that goes into why you would use market profile in the first place. And there's like tons of books you can read on that as well if you want to look into it more. Again, this is just kind of an introduction, just kind of easing you guys into how I use it and how you could potentially look to study and build these structures on your own. And now I'll talk about how I specifically use it for the futures and the SPYs. So again, I use those high volume nodes. I use clusters of high volume within value areas. I build out composite structures over balance areas. And then I look to combine these areas when there's confluence with major swing highs, lows, breakdowns, breakouts, consolidation areas, those other classical technical techniques that, most people have learned by the time they start trading. So last, I just want to show you guys what it looks like when I actually build out this chart. So I've definitely shown you guys how the levels look, but I've never included the volume profile in so you guys can really see, how I built that in the first place. So if you look at this previous day, you can see where the peaks and the valleys come in from the market profile chart. And these areas of really low volume are where I'm going to be looking to have major inflections. You can kind of see that price just kind of vacuumed through there, held a little bit, and then price discovery continued higher until we got this area of high volume up here. Right? And this is where we spent a little time consolidating, into the close a ton of volume was done, so that's going to build out a much more important inflection. But now on the next day, I'm interested in seeing how this low volume area reacts to price because I know that the market didn't spend any time doing price discovery there. We ripped through, we moved right through, and we didn't spend more than 5-10 minutes within that area of price. So I'm interested if the market comes back into there, it could potentially be an area where we have to hold, we have to have consolidation, but can potentially launch price as well. So what you see is on the next day we come in, we start trickling into this zone, we fill all the way in, and then look at where the low comes in. The low of the day comes exactly when the volume in the profile chart starts to pick back up again. So that's how you kind of build out these levels, and then you look to just lean on them when price gets into the zones of the areas. So it's definitely much more nuanced than just finding the low volume and just smacking it in. Like I've been building these structures for 2 years. Like there's a lot of work that needs to go in. You need to know contextually, why is this area important? Why are these lows down here important? This line right here is a high volume node. This line right here is a high volume node, and you have to include all of those. So it's a much bigger structure, and this is just like an introduction. This is a quick example of how I would go about building my charts using the previous day's volume profile as a way to build those key inflection areas. But yeah, that's about it. That's a quick introduction to this. Maybe another time we'll do more in detail, like walking through how I build out a structure on a specific day, but that's a good introduction to how this all works.
Questions?
Do you build market profiles based on, for example, when the contract starts, like from the beginning of the month or from the beginning of the week?
No, so on Thinkorswim, So on Thinkorswim, they have the continuous contract for the future, so it just continues to roll over and there's no gaps in the volume. It always has the most recent contract on top and it kind of layers the volume. I don't really know how they structure that. but it builds it out as one continuous thing. And then, yeah, I just build them out on the daily charts. So let's say I build like a 10-day, 10-minute, take a 10-day, 10-minute, lay over all the volume profiles, build composite structures if they're balance areas, and then kind of work off from there. But the good thing is once you start doing it, every day builds off the previous day. So if you guys have ever seen that sheet that I bring in with the levels, like it's not like I have to redo every single level every day. I have a pretty good idea of where the levels were from the previous day, how value shifted, do I need to move levels up, down, do I need to, fill in levels that I didn't think of before, etc.
I have a question.
Sure.
Have you tried using a market profile and see like where they use numbers to represent the price instead of a chart? Like there's a market profile where they have numbers and they have the volume profile together instead of, because this one's a volume profile, right?
Mm-hmm.
Where you put the volume over the chart.
Mm-hmm.
And then there's market profile where you put numbers, the numbers represent the time every 30 minutes or an hour, and then you have the volume next to it.
Yeah, so the market profile chart would just be if I took out the candlesticks, right? Because in multiple days, like if you have a daily time frame and you put all of these bigger clusters, like if you erased, like took the candlesticks out and then just put these peaks and valleys, like this big shaded area, and just stacked them up against each other and then built it out for like several days with time on the bottom, yeah, that would be exactly what the market profile is. Like you're exactly right. This is just volume profile. This is the indicator. But combining them all together, like how you're saying, is how you build a market profile chart. Yeah, but I didn't want to just plop that on there without the candlesticks because I'm trying to build the connection between the two. Because that's what I do. Like I have the market profile charts, but I'm also looking at the candlesticks too to try and find those confluence of areas.
Can you expand on why this is used more for like SPYs and like indices as opposed to stocks?
I think it's because it's following institutional liquidity, right? Like I think you could definitely use them for high beta stocks, but at the end of the day, like you don't want to do a volume profile analysis on a stock that just doesn't do a ton of volume or doesn't have a large amount of institutional participantship, because what I'm really looking to do here is to follow the money. I want to see, where are the most people getting involved, where's the most volume being done. And in certain stocks, you just don't have a ton of people doing volume at specific prices. It'd be interesting to look at it on day one IPOs. Like if I pulled it up for Peloton today, I bet you would see a really huge cluster of volume done at $27, right? So in niche examples, I think it can add a little bit of edge to your analysis of what a chart's doing. But from the theories that I've studied, like market profile theory and like what it's mostly used for to build edge, I've seen it used basically primarily for ETFs and like the most liquid markets.
Cool. Yeah. Is there a version of volume profile analysis where rather than aggregate of total volume, it's broken down into order size? Say, for example, there are a lot of, they could be equal in volume, but rather one has 2 or 3 large orders, one's 10, 20.
Yeah. I don't think that this charting software has it, but like Thinkorswim or any of the, like it's not going to be a baseline thing, but you can make it yourself in Einstein. That's something that I've thought about working on to look at. I guess what you're saying is to see how specific units of volume change price. That's possible. Dr. Steenbarger does that. He builds it out for ES. He has some software that he runs that makes it intuitive, but from my understanding, I can build it in Einstein, but it's going to be a little bit labor extensive because I have to define what is the size of my own volume bar. It's not by time, it's not by price, it's by specific amount of volume, right? So every time, let's say in the ES, there's 1,000 lot contracts, right? If there's 1,000 lot done, I want to see how much is price moving for every 1,000 contracts traded in the ES. That's the size of my volume bar, and now I want to see how much does that size of a volume bar move price. That's definitely possible to do. You would have to build it out yourself, I think. Or talk to Dr. Steenbarger and see how he does it. Last time I spoke to him, he said that I could do it on my own. I think he built some type of script out in whatever specific charting software he uses.
So if you're using volume profile and you're trading active, do you think you're losing out a lot of volatility from the stocks? Because the price, the point of value is, and on the point of value, you see a lot of price action, and if you're just trading off of that value, you're not really getting the volatility of the stock, right?
So do you mean like in this area, like I would just be in, but I wouldn't be out and in and out and in and out and in?
If you're trading intraday, you're probably missing out from the action, right? If you're swing trading, you could just put on a size and wait for the next level.
Yeah, I mean, you can see on certain days we touch several levels, but there are definitely days where we touch one level and then we go to the next level and we don't even go anywhere. On those days, for sure, I'm missing out on the volatility of trading, like a high beta stock or something that moves more. And that is something I'm trying to add to my game. I'm trying to, get more comfortable trading other high betas, specifically for when the market is range bound. Because on a day, these days that are in question, the SPYs moved a ton, right? Because we're in a little bit of a volatile market. There's headlines. We put in a major low on the daily yesterday. So, in those instances, these are market days, right? The VIX is above 16, 17. Makes sense to trade it. But if I showed you structures of when the VIX was below 15, you'd be absolutely right. Like you'd be missing out on a lot just waiting for levels because the market doesn't really move, which is why we kind of look to move more towards individual stocks when the VIX is under 15 and kind of just use this as an idea of where the market is, where it could go, and then try and find some edge in individual stocks.
Right, I just come up with a good idea.
Mm-hmm.
Have you tried and tested whether previous day market profile point of control is at the same or close to a level of 2-day VWAP?
I don't know if I've specifically looked to see if it is, but on this it is interesting for today. The high volume node of both days is not that far from 2-day VWAP. But I think if it was, that would just be a further area of confluence. If we pulled into 2-day VWAP and 2 previous day high volume nodes, that's probably a buy. So I think that's just another area of confluence. And I've probably done that without thinking about it before, because in the futures, I use the continuous VWAP because the futures trades all night too. So I'm not looking at 2-day VWAP as much in the futures as much as I am looking at the current VWAP.
I mean, just to check whether they're showing the same levels, because the point of control show you the level where the most volume being done was, right? And the VWAP should show kind of the same thing, right? 2-day VWAP.
Yeah, I think they're just calculated differently.
Yeah.
There must be some different type of percentage because it aggregates over the course of the day both times. I don't know, that's a good question. I'll have to look into that more.
Now it's your turn. Which effective trading technique from this video will you try next? Are you going to use market profile to help you make more on trend days, or lose less when you spot an inside day? Let us know by leaving a comment below right now.